And that's your closing bell for this Friday, April 22nd, and it couldn't come soon enough. Brad Smith here with Dave Briggs. We've been counting you down to the closing bell. Major averages in the day in the red across the board for the Dow. It is the worst day of the year on a percentage basis. You saw that move lower by 2.8%, 979 points in negative territory. The S&P 500, you're also seeing that in the day lower, closed down by about 2.8% there as well. We'll round that off to 121 points. Rare triple-digit down day for the S&P 500. The NASDAQ composite also ended the day lower by about 2.5%, just a little over that, 335 points lower for the tech-heavy average. And so to put a bow on this week's trading activity, we have Eva Ados, who is the ERShares COO, and Sandy Villere, who is the Villere Balanced Fund Portfolio Manager. Great to have you both here with us today. I think we're just wrapping our heads around this sell-off that accelerated into the close. Sandy, particularly, what would you take away from this week's trading activity, especially how we've ended the week now with these deep declines across the board, and what were the markets really latching onto to move us lower in this direction from your perspective?
Yeah, and you said it best. I'm just glad the market is closed. I mean, what a day, worst day of the year. So there we go. But, things were going fine. Earnings were fairly decent, obviously, other than Netflix. But when Powell started to speak yesterday and he started to say we're going to pull forward these rate hikes, we're 50 basis points for sure in May. And then you're looking at possibly 75 in June, 75 in July. The market did not like that one bit. And we're basically in a big tug-of-war between this red-hot 8.5% inflation number and what the Fed's got to do, which is throw a cold towel on an overheating economy. So once he started to speak, the market just started to sell off, and it really didn't look back.
And it really built momentum right there to the closing bell. Ava, what did we learn today?
So what we're learning today is that there's a lot of concern, not just for the U.S. economy, but also for Europe and China. And I think investors are afraid that even though the U.S. is compared to the other markets very good, and on historical levels, we are still above the historical average. And we have to remember that we got spoiled with very good conditions for a long period now. And so, but I think investors are watching what's going on in Europe, what's going on in China with COVID, with supply chains, with costs rising. And if that slowed down, and we saw the expectations for these markets lower for the rest of the year, so that slowdown may spill over to the U.S. Do I say we will have a recession in the U.S.? No, but the odds are increasing, and the things do not look as good as they used to.
I'm glad you bring that up, because we've been discussing with a few guests how any signs of a recession would show up in the markets before perhaps some of the economic data. And so take us into how you've been evaluating the environment right now. Are recession fears, to your point, overstated in the U.S., or are some of the recession fears justified? And if so, on what basis?
So we believe the U.S. will be spared from a recession in 2022. And the reason is we are largely energy independent, and also we are a very strong producer of food, if not the largest, one of the largest globally. And so we have a very strong fundamentals and a lot of strengths that will keep the economy strong regardless of inflation. And that being said, the biggest risk is inflation, and what that is doing to interest rates. And it all comes down, and I think we live the energy and the food costs rising every day. But what's coming out with this earnings season is the labor cost, and that's very concerning to us.
Sandy, I want to follow on your prior point about not just the 50-point hike, the first since 2000, but I believe you said a 75-point hike following that. That is the first I've heard of that. Why do you see that coming, and will the Fed find that soft landing?
Yeah, I'm certainly hoping they do find a soft landing. And to go back to a 75 basis point hike, you got to go back to Greenspan 1994. So I think that is on the table, as Powell was pretty clear that he wanted to front load a lot of these things. So the other thing is, can we have a soft landing? Are we going into a recession? And I believe that since this is somewhat self-inflicted and the consumer is quite healthy, I think we can. I really do. I think the market is overly discounting an overly hawkish Fed, and I think if it goes a little bit too far, they can control it and slow it down. So we're at full employment. It's just we got to tame this inflation number as it's getting everybody at the gas pump and at the grocery store, and we just got to get it under control.
Sandy, in your notes, you also believe that over the next few months, investors can start to play more offense in the dark days with light volume towards July and August, you say. Explain that for us further here, especially when we see a down day like this, and some people may be sensing, okay, what if I did set a position at this point?
So we're getting close. I mean, I'm not a technician, but I believe that 4,200 on the S&P is kind of a good spot to start picking away at some things. I do think over the summer, looking forward to some rate hikes and light volume as we typically have during the summer. You could see some volatility, and that could be an opportunity to go to your shopping list and find those great companies that have just sold off for reasons that maybe don't make intuitive sense. So that's kind of what we're thinking is maybe not buy a bunch today, have some dry powder. But as we look into, I'd call it July, maybe end of July, August, we could get pretty aggressive and start to buy some high quality businesses.
Ava, I want to get your reaction to something the Treasury Secretary said earlier today. Janet Yellen saying the stock market is not a reflection of the underlying strength of this economy. Now, she said that before the numbers plummeted. Is the market, the numbers that you just saw at close, a reflection of the strength of this economy right now?
I think they are. They are a reassessment of what the economy looks like for the rest of the year and the beginning of 2023. I think analysts are now reassessing their numbers. They're more interested to look the guidance that companies are coming with rather than the actual performance. So I think it's forward-looking. I think we might see if you look at the yield curve, there's a steepness and a lot of activity in the short term, but between the 5-year and the 30-year, it's very flat. There's modest activity. And what that suggests is either that inflation will slow down or that the economy will slow down. But we might also see another shift up on the yield curve that will better reflect the situation with inflation. And I think that's what analysts are looking at right now.
Ava, just very briefly here as well, you point out healthcare may be shaping up to be a bright spot in Q2 and throughout 2022. Take us into your thinking there, especially coming off of the pandemic where we know healthcare names were so closely watched, either tied to some of the rollout of vaccines being available or other solutions that were out there to help counter the deepest points, or at least the biggest points, some of them, in the COVID-19 pandemic.
Yes, so the argument here is that healthcare tends to be price inelastic. So when it comes to an important drug or cure, you're not going to be affected by its price. But that being said, we saw today HCA coming up and disappointing. And so you have to be, it's a stock picker's market. So even in a defensive area and a defensive sector, you have to be very selective with what companies you choose. Companies that are not affected with wage inflation. We see the SG&A costs rising significantly. Companies that are really, truly price inelastic. And look for those margins being steady. Steady margins going forward is the key to watch.